Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and the short-term price action, discussing the recent correction to 57,000. What implications may this have on the high time frame charts? What are the next short-term expectations and the key levels you should be paying attention to? We'll also be discussing the daily chart in massive amounts of detail, as well as the weekly technical levels you should be paying attention to. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you were interested in, join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, you can join us in the VIP channel by contacting me in the pinned comment of the free channel by clicking my name. You can also find all of our trading track record via this first link over here. This will show you, of course, 39 months of trading data, every single month broken down. We have an 81.16% average win rate over the 39-month period. And if you do want an in-depth view of exactly what you're going to get access to in the VIP, click that second link. It's going to take you to a video. It's a 10-minute video which shows you exactly what you'll get access to. It shows you inside the channels themselves and explains everything. Check it out, guys, and let's jump into the video. So taking a look at that recent price action, Bitcoin has seen a pretty significant correction toward the downside again. This correction, there's a lot of things behind the scenes that goes on when we see these large corrections. There's some rumors saying that this move was to liquidate a large entity that was overexposed in long positions. But nevertheless, whatever the consequence or whatever the cause of this correction was is irrelevant. The fact of the matter is Bitcoin has now seen that correction. We're now sitting at 59,000 as a consequence of what was quite a steep correction over the past 24 to 48 hours. Now, what we have seen over the past 24 hours is that Bitcoin is more or less holding relatively steady at that range low of support. If you do remember, prior to the break upwards, we had this horizontal consolidation. Of course, we had that range high resistance, which we eventually broke toward the upside, resulting in a continuation to our prior area of support, retesting that as a resistance. We were unable to sustain above that region, which resulted in a small drawdown towards that prior resistance as support, and that is when we saw that cataclysmic correction on the short term, taking us all the way back down to that range low support of the horizontal consolidation. So for the most part, we can take a look at this recent breakout and ignore this data point and look at the horizontal consolidation we are still sitting within. We'll be doing that in today's video, discussing, what is the likelihood of a continuation, what is the likelihood of a continuation downwards, and what are we watching for either of these scenarios to actually activate and to trigger. We'll also be jumping into the daily charts, discussing what implication this short-term correction has really had, and particularly what the midline breakdown really means, as it doesn't really mean what you probably think it means. We'll discuss that in detail today, and of course, we're discussing the possibility for a high time frame downtrend, and what really needs to happen for Bitcoin to finally break through this bullish consolidation. So again, we'll get into all that, starting on the market data. There's a quick update. 24-hour volume down 3.52%, 153 billion. 24-hour liquidations down 46%, still quite a fair amount at 168 million. Of the 168 million in liquidations, 99 million come from longs and 68 million coming from shorts. The DXY has seen a small little bounce. Again, this is going to be our sell side liquidity. As we've said, this is going to be our first reversal point for the correction, after which we broke down from that yearly uptrend. If we do lose this local low at 100, we are expecting a continuation to retest 99.5. Until then, this may or may not be a point of which could result in a continuation to potentially reject and retest that yearly uptrend. While we remain underneath this yearly uptrend, the macro expectation is that the DXY is going to eventually continue downwards. However, the short-term price action now is at a local support, and therefore we do not expect immediate corrections on the DXY while this level is able to sustain. However, like we just said, we have broken down from a multi-year, this is a 1.5 year long symmetrical triangle formation, which if we look at the measured move, does indicate a price target of around that 94 to 93 level. So a massive potential correction for DXY is looming in the coming months if we are able to sustain underneath that uptrend. Pay attention to that. The S&P 500 has seen, as a consequence of the DXY bouncing, money flowing out of risk assets. We talked about it in our prior video. We have seen a little bit of a correction here for the S&P 500. Again, unable to break through that prior high point. Not too much of a concern. As we mentioned, we do want to see the price sustain above that 5,300 level. Until then, we are just developing a range. So until we break below 5,300 and actually break that range low, we're going to be chopping between this range until we make that directional decision. Are we going to see the break upwards, or are we going to see a high time frame downtrend? Remember, under 5,300, we enter a high time frame downtrend. We are officially now bearish for the first time in the S&P 500 since we broke out of that resistance all the way back at January 2023. And that would be when we become bearish on the S&P 500. Until then, we are expecting continuations, and particularly if we break over that prior high, we look for 6,000. That is it, guys. Let's jump into Bitcoin. A quick word from today's video sponsor. If you do want 15 to 45% discounts on your trading fees for life, sign up to BitUnix, BingX, and BitGet down below using my referral links. You have to sign up via those links to get access to that. You also get access to around $5,000 in trading rewards. You can sign up to any or all of those links, but you don't need to, of course, sign up to all of them. It's kind of pointless. Choose one to trade on. You will still get that discount on your trading fees, and you'll still support the channel. You can find out more information about a couple of those exchanges in a second when we play the ad, and we'll jump back into it. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. So we're going to start on probably the most pressing matter, and that is the loss of that major 19-day recent resistance, which was that midline, and of course this dynamic resistance and support level, which has acted as a trigger point throughout the entirety of the last 5 months. Now, what we have been saying, which is correct, is when we break through this midline, we generally see a directional continuation to the range high, and if we break down below the midline, we generally see a directional continuation to the range low. However, there is a nuance to that statement as well. When we break from the bottom side above the midline, there is a greater probability that we see a range high retest first over a range low retest. And to show you the exact example of what we mean, we're going to be utilizing this particular example right over here. So let's go ahead and take a look at this scenario. We saw that daily candle close underneath the midline. We saw a correction, but then we saw a continuation back above that midline. And then we saw a correction to a range low, because at the point of the breakdown of that midline, from that point onwards, the probability of an eventual range low retest is greater than a range high retest. We will eventually retest the range low at a greater probability prior to retesting the range high. So that's the key word, prior to retesting. So when we broke above that midline, after retesting a range low, there is a greater probability we will eventually retest the range high first before then retesting the range low. Now we can look at other scenarios in this channel, such as this scenario here. We broke through a midline. There was a greater probability we would then retest the range high before retesting the range low. We did do in fact that. We can look in the next scenario. We broke down from the midline. There's a greater probability now from this point onwards we retest the range low prior to retesting the range high. That is a tick. We did that. We can look at this scenario. Again, a greater probability we retest the range high prior to retesting a range low, a tick. So we can see how the retest or the breakthrough midline doesn't necessarily, and we never said, and we want to make very, very clear that it doesn't necessarily mean we're going to see those immediate continuations to the range high. As we've said many times, the distance from that midline to the range high is a massive, massive area of resistance. It's going to take a very long time for the price action, multiple weeks potentially, to see those continuations. What is very important is when we look at this trigger point, understand what the trigger point means. It means when we break through that trigger point, the probability we'll see a range high retest prior to a range low retest is greater. So that is what we're still going off. And if you're looking at the midline, you're saying we've lost the midline, it's game over. Well, we can look at scenarios such as this, where we've seen that breakdown, then we see a loss of the midline again, only to then eventually see the continuation. So what is really important is we look at the short-term trigger points that are going to really define where Bitcoin is going to go next, and then use the high time frame context as confluence for those statements. So on the macro chart, Bitcoin is still technically bullish, right? There are a lot of warning signs developing. There are a lot of things on the charts that I don't like the look of. We'll get to that in a second. However, we do have to take this formation at a face value. This, at the end of the day, is a descending channel formation. And while we remain between the range high and range low, all this chop, all this sideways, sporadic price action, this unclear directional continuations in the short term, all of it should be expected. We are in a consolidation range. Only upon the breakout of the range high and the breakdown of the range low will we then get a definitive answer in regards to where Bitcoin is going to move to on the high time frame charts. Until then, any movement between that low and that high is expected and normal, healthy consolidation. That is what we have to pay attention to. Again, it is the depth of this channel, and by depth I mean the volatility or the percentage change between the range low and the range high, that gives the illusion that these moves are unnatural and gives the illusion that these moves have more significance than they actually do. We have to watch the high time frame trigger points of the structural consolidation to then determine the directional continuations. So for now, we haven't seen much change on the short term. We have seen a correction, and let's go ahead now and discuss that. So what we have seen, guys, on the short term is a correction. We have retested our critical level of support at 58,000. If we do look, this is going to be our short-term consolidation range. We then break upwards. We failed to continue higher. We rejected from that prior area of resistance. This is our prior support turned into an area of resistance. We do know for a fact that this is going to be our weekly resistance. We do need to break above to then see a continuation into the upper part of the channel. Again, we do have confluence here with that weekly RSI. We'll come back and discuss the weekly RSI in a second. But more importantly, on a horizontal scale, we definitely need to break above this region to then see a continuation high. As you can see, the VRPV starts decreasing as we push past this region, as opposed to increasing into that region of resistance. You can see a very clear difference over here. So again, we do need to break through 64,000. We need to sustain above 64,000, which is going to be our current resistance, to see those directional continuations higher. On the downside, we do have a local support at 58,000. We have also got our sell side liquidity at 56, and we've got our critical base of support at 54, which is also now developed into 53,000. Which is going to be that range low of the consolidation, that macro consolidation, that range low region. If we do not sustain above 53 to 54,000 on the daily chart, if we look, we have never seen a daily candle close below or above this region. If we close a daily candle below or above this consolidation, that will be adequate to assume that we are going to see directional continuations. So worst case scenario, Bitcoin could see this wick fill and the price action come back down to this region. That is worst case scenario, but we are still likely to hold onto this consolidation while we are within. Only upon the daily candle close below would we invalidate this bullish structure, as well as enter a official high time frame downtrend according to the Gaussian channel on the 3-day chart, which we'll come back to and discuss in just a moment. Moving back to the short-term price action, there are a few scenarios of which Bitcoin could undergo over here. Of course, for us to be confident in a bullish reversal, Bitcoin will need to break above 64,000. That is a must, okay? So that is when Bitcoin will turn bullish again on the higher time frame, and we would see a continuation into that $69,000, $70,000 region. On the short term, we are at an area of support. This is a critical area of support that Bitcoin will need to sustain. We have also got our sell side liquidity, which we could see liquidation wicks down to before continuations. That is also a key point we should be watching. If we drop below this what is it going to be? $56,000 level, the sell side liquidity, it is a very, very high chance we then see a continuation into 54,000 to 53,000 to retest that low point. Until then, I would assume Bitcoin is closer to a reversal than a continuation lower. So we're watching for reversals to develop from this support over here. If we do see this liquidity range retested, I would expect bounces to develop. If we lose that liquidity level, that sell side liquidity, I would then expect a reversal to complete towards the range of the channel at 54,000 to 53,000. Again, the price action is immensely choppy here. It is very, very hard to read what is happening. Again, there is a lot of manipulation going on, a lot of hedge funds trading against each other, a lot of large transactions occurring, pushing the price action very rapidly in either direction. But we have to take a look at the information we have available. What can we see developing? We can see immediately on the hourly chart that momentum is starting to show initial signs of bearish exhaustion at support. And therefore, we are again assuming this level will hold as support until proven otherwise. Support is support until it is not. We can see already that RSI is slightly peaking its head over, indicating momentum is starting to flip back positive. We could then see a continuation upwards into that midline resistance yet again. So keep your eyes on that, guys. Again, I'll summarize the most important levels. The most important levels are going to be our short-term supports at the current point of retest, 58,000 to 56,000. We have got our macro high time frame support at 54 to 53,000, which is going to be our range low. And then we've got our major point of resistance at 54,000, which we need to break above. Until then, we are still chopping sideways. Nothing is really happening. Don't get caught up too much in the short term. The weekly chart is something of massive significance, and this is going to be that weekly RSI. We need to see, for Bitcoin to continue higher within this channel and potentially break out, this weekly RSI needs to break positive. It is as simple as that. But it needs to break positive prior to a breakdown of this horizontal level at 44. If we see a breakdown of the horizontal level at 44, which is an indication of the prior low point for Bitcoin right over here, okay? If we see the RSI break below this region prior to a breakup, that would almost guarantee the fact that we are going to see a very strong correction and invalidation of this channel. In fact, they may occur around about the same time if it were to develop. Okay, this would tell us that this strength, okay, and strength can be represented in momentum at this point in the price is lower than the momentum and strength at this point all the way back in October 2023, which is an indication the price is overextended, and we then could see a continuation downwards into a high time frame downtrend. That would be a very, very bearish thing if we were to see that. Furthermore, if we look at the 3-day chart, if that were to occur, it is highly likely that Bitcoin will be breaking below the Gaussian channel lower band, okay, for the first time in over a year and a half since January 2023. Again, this is a bullish flip in the Gaussian channel. This, a breakdown, would be a bearish flip in the Gaussian channel. You can see we have not done that yet, and we wouldn't have done it for since January 2023 up to present. So if we were to see the 3-day breakdown here, we would also see the weekly RSI breakdown. We would very likely see the bullish structure invalidate, and we would then very likely enter a higher time frame downtrend with price targets of 50,000, 49,000, potentially even 42,000. Watch out for that. That is the worst case scenario. Do I think it's going to happen? I would say according to the current data, it is unlikely, but it is always a possibility. Watch that weekly RSI. That is what I'm watching most importantly. Thanks for tuning in, guys. Have a fantastic day. We'll catch you guys in the next video. See you then.